February gave us a real clear signal. The market slowed down in activity, but prices haven't really dropped. That's where a lot of people get confused. When you hear that sales are down, it's easy to assume the market must be weakening, but that's not really what the data is showing right now. Depending on your price range, the property type, and even your area, the market is actually behaving very differently. So in this update, I'm going to break down what's happening across Winnipeg, surrounding areas, and more importantly, what it actually means if you're thinking of buying or selling or doing both. Looking at all MLS sales for February, this gives us the clearest overall snapshot of what the market actually did. Total sales came in at 786, which is down about 11% compared to February 2025. So we did see a noticeable slowdown in activity. And at the same time, active listings were down just over 8% year over year. And the current listings dropped even more, down to about 11%. So inventory is tightening up while sales are also pulling back. And dollar volume followed that trend, coming in at just over 314 million, down roughly 9.5% from last year. This is where things get interesting. Even with fewer sales and less overall volume, the average price actually increased to just over $400,000, which is up about 1.5% year over year. When you put this together, February really wasn't about prices dropping. It was more of a slower month in terms of activity, while values held steady and even pushed slightly higher. And that's an important distinction because a lot of people assume sales are down, prices must be falling too. And that's not what the data is showing here right now. Hey, it's Justin Zinkowski with Royal LePage Prime Real Estate. If you're watching this, you're probably trying to figure out where the market's at and how it might affect your own plans. Maybe if you're thinking of selling or buying, or maybe trying to do both at the same time. This video is going to help you with that. If you're thinking of where to start, how does this apply to my situation, there's a link below in the description, and we can start a quick call to see where you're at and to see what makes sense for you. Now let's zoom in on the residential detached homes, which is the biggest segment of the market. In February, there was 489 detached sales, which is down about 11% from February of 2025. So very similar in what we saw in the overall market. Activity was slower, inventory was also tighter, and active listings dropped to 981, down over 16% from year over year. Now when we look at pricing, this is where things stay pretty steady. The average detached price was $456,232, which is essentially flat year over year, down less than 0.5% from 2025. So no major price drop here, just stability. And when you compare the 5-year average price of about $423,900, prices are still sitting at over 7% higher in the long-term average. So even in a slower month, values are holding above normal levels. So overall, for detached homes, February was really about less activity, tighter inventory, and stable pricing. Not a market that's dropping, just one that's moving a bit slower than last year. Now, if we look at the year-to-date numbers for detached homes, this will help smooth out some of that month-to-month fluctuation. So far in 2026, there have been 856 detached sales, which is down about 13.7% compared to the same time in 2025. So activity is still trailing last year. The number of listings year to date is about 1,382, which is about 14.5% year over year. So just like we saw in the monthly numbers, both supply and demand are lower at the same time. Now on the pricing side, we're seeing a slightly different story. The average detached price year to date is $445,448, which is actually up about 1.7% compared to 2025. When you compare it to the 5-year average of about 414,000, prices are still sitting over 7.5% higher than the long-term norm. So even though fewer homes are selling so far this year, prices are still holding up and trending slightly upward. And one more thing to look at, is the sales to listing ratio, sitting right about 62%, which is very similar to last year. Tells us the balance between supply and demand really hasn't shifted dramatically. So the year-to-date story for detached homes is pretty consistent with what we saw in February. Lower activity overall, but stable to slightly increased prices in a market that's still fairly balanced. Here's a couple indicators that really show what's happening behind the scenes, how competitive the market is, and how buyers are actually behaving. Starting with the absorption rate, or what's often called months of inventory, this is basically asking if no new homes came to market, how long would it take to sell everything that's currently available? In February, the number came in about 3.26 months. Generally speaking, anything under about 3.5 months points towards a seller's market. So even though things have cooled from previous peaks, inventory is still relatively tight. And that's a big reason why prices have been holding. And if we look at what buyers are actually doing when they make offers, in February, about 41% of the homes sold over asking price, around 9% sold right at list price, and roughly 50% sold under asking. So this is not a one-speed market. We've got some homes that are attracting multiple offers and selling over asking, while at the same time about half the market is still negotiating below this price. And when you look at the trend over the past year, you can see over asking sales have started to climb again after dipping through late 2025. So overall, what this tells us is we're in a market that's competitive in a certain price ranges and property types, but not across the whole board. When we break it down by area, this is where you really start to see that different parts of the market are performing very differently. According to the Winnipeg Regional Real Estate Board, the neighborhood with the most sales in February was Highland Point, followed closely by Waverly West. And you can see that reflected in the numbers. One of the busiest zones was Area 4E, which includes Northwest Winnipeg, areas like Riverbend and Highland Point. That area had 16 sales with an average price of about $552,000, and homes were selling around 26 days on market. Then you've got Area 1R, which covers Waverly West, Bridgewater. That area saw 15 sales with a much higher average price range, with a much higher average price of about $809,000 and about 29 days on market, showing steady demand but at a higher price range. When you put it all together, you've got different areas performing well, but at very different price ranges, points, speeds, and locations. We break it down by price range because this really shows where the majority of the activity is happening. The most active range in February is the 400 to 500,000 with a total of 117 sales, making up about 24% of all detached homes. Right behind that was the 300 to 400,000 with 97 sales, making about 20% of the market. So just those two price ranges alone account for nearly half of the detached sales, which tells you where the bulk of the buyer demand really is. So if you're selling in that price range, you're right in the middle of the most active part of the market. But when you break it down even further, you can see how concentrated things really are. Like the 425 to 450 had 36 sales, 450 to 475 had 36 sales, and even the 600 to 700,000 had 41 sales, which is a strong number at that price point. There's still solid activity even as you move up in the price. Once you get into the higher price ranges, 700 to 800, 18 sales, and there were 14 homes that sold over $1 million. That's slightly down from the 16 sales from last February, but it still shows there's movement at the top of the market, and the highest sale in February came in just over 3.3 million. Overall, it tells us the market is very demand driven in that 300 to 500,000 price range, with steady activity above that and fewer buyers as prices increase. It looks like there's a lot of inventory. It's not where most buyers are shopping. In February, there were 981 active detached listings on the market with an average of about 48 days Under the 300,000 and even into the low 300s, inventory is much, and homes are selling generally faster. And you can see that reflected in days on market, and around with 33 to 38 days for the 300,000 range, compared to the 60 plus days in some are that. What this tells us is there's more competition among sellers in those higher price points, and more competition among buyers in the lower price ranges. Looking at Winnipeg detached homes, because this is where things can look a little different compared to the broader market. In February, there was 339 sales, which is down about 6% compared to February 2025. Active listings came in at 442, down about 11% year over year, and also down about 13% compared to the 5-year average. So inventory in the city is still relatively tight. And that's where it stands out. The average price range in Winnipeg came in at $470,711, which is up about 5% from last year and sitting 11% above the 5-year average. So even with fewer sales and less inventory, prices inside the city are actually pushing higher at a stronger pace than what we saw in the broader market. This will give us a real good overall view of how different parts of Winnipeg are performing. Looking at the year-to-date average prices, places like Bridgewater, Waverly West are sitting around 640,000. Southeast, like Sage Creek, St. Vital, 520. Northeast, East Kelowna, Transcona, around 395,000. The West is around 313. North, 356. Even within Winnipeg alone, you've got a pretty wide spread in pricing depending on the area. Just outside the city and the surrounding areas tell a different story. In February, there's about 45 sales, which is down quite a bit from last year at 75. There was a noticeable drop in activity. This is a much smaller sample size, so these numbers can move a bit more month to month. At the same time, the average price came in at 540,000, which is down from 640 last February. So both sales and prices pulled back 2025. The sale price to list price ratio came in right around 100% compared to about 98.8 last year. So homes are still generally selling close to asking, just with a bit more time involved. These areas will include like Headingley, East and West St. Paul, Oak Bank, RM of Springfield, Oak Bluff, and St. Andrews. Looking at condos, there's 118 condo sales in February, down about 24% year over year. And at the same time, inventory actually increased with the 386 active listings, up about 11%. So unlike detached homes where inventory is getting tight, condos are seeing more supply and less demand. That's where it gets interesting. The average condo price is about $284,000, up about 3.8% from last year. Now compared to detached homes, sitting around the 456 to 470,000 price range, you're looking at roughly $170,000 to $180,000 price gap between condos and detached homes. For a lot of buyers, especially first-time buyers or anyone getting priced out of detached homes, condos are becoming an entry point into the market. So condos feel like a step down, detached homes feel out of reach. There's a lot of buyers landing in the middle. We look at attached homes. In February, there were 90 sales, up about 4.6% from last year. And inventory also increased with 236 active listings, up nearly 29%. So similar to condos, we're seeing a lot more supply coming to the market, but unlike condos, sales are still increasing. Price-wise, the average price is sitting around $379,000, which is basically flat year over year, but still up 5% compared to the 5-year average. And this is where attached homes really stand out. For a lot of buyers, this becomes a middle option, more space than a condo, but more affordable than a detached home. We're trying to make sense of everything we just went through. Here's what it actually means. Right now, Winnipeg and surrounding area market is not moving as one market. It's split into two different segments. Lower inventory overall, especially in detached homes. Sales slightly down year over year, but still tracking to close to term averages. Still closely holding steady or increasing, particularly in Winnipeg. The real takeaway is even with fewer home sales, prices are not dropping. They're staying stable because supply is still limited. Condos have more supply and less demand, and detached homes are acting like the middle ground. The market is active, prices are holding, but strategy matters more now than it has in the past couple of months. So if you made it this far, you're probably starting to get a clear picture of how the market is behaving, but also realizing your situation is a little bit different than the averages. And that's where most people get stuck, because it's not just about what the market is doing, it's about what you should be doing within it. Or if you've been going back and forth on whether now is the right time, there's a link below. You can start a quick call. We can walk through the situation on what's realistic for today's market and what your next step should be. And if you're not quite there yet and you're still trying to figure out things behind the scenes, there's a couple of guides below to break everything down step by step. Either way, it probably makes sense to understand your options now before things start to shift more into the spring market. Thank you. We'll see you next month.